Ladies and gentlemen, good day and welcome to the Hindware Home Innovation Q2 FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ronak Oswal. Thank you, and over to you, sir.
Thank you, Bhuvik. Good evening and welcome everyone. On behalf of Aryan Capital, we invite you to Hindware Home Innovation Limited Quarter 2 and H1 FY26 earning conference call. From the management side, we have Mr. Nirupam Sahay, CEO of Bath and Consumer Appliances Business, Mr. Rajesh Pajnu, CEO of Pipe Business, Mr. Sandeep Sikka, the Group CFO, and Mr. Naveen Malik, CEO and CFO of Hindware Home Innovation Limited. Kindly note that some of the remarks or observations made during today's call might be forward-looking, such as financial projection or statement regarding company's plans, objective, expectations, or intentions. The company does not have any obligation to revise this forward-looking statement to reflect any further events or developments. For a comprehensive disclaimer, please refer slide 2 of result presentation. With that, I would like to hand over call to the management for their opening remarks, post which we will open for question and answer session. Thank you, and over to you, Mr. Naveen.
Good evening, everyone. This is Naveen Malik, and welcome to Hindware Home Innovation Quarter 2 FY26 earning call. I will start with a brief summary of our performance for the Quarter 2 FY26. Our business CEOs will then share updates on their respective segments. For H1 FY26, the company reported consolidated revenue of rupees 1,207 crore with an EBITDA of rupees 118 crore and a PBT of rupees 24 crore before exceptional items. For Quarter 2 FY26, the company reported consolidated revenue of rupees 676 crore with an EBITDA of rupees 60 crore and a PBT of rupees 14 crore before exceptional items. As communicated last quarter, in a strategic move to sharpen our focus on the kitchen appliances segment, including chimneys, hobs, and cooktops, the board has approved the discontinuation of high loss-making product categories such as air coolers, other than through the e-commerce channel, ceiling and other fans, air purifiers, water purifiers, and furniture fittings. Please refer to note number 3 of the published financials for further details. I would now like to hand it over to Mr. Nirupam Sahay to take you through the bathware and consumer appliances business. Over to you, Nirupam.
Thank you, Naveen, and good evening to everyone. For H1 FY26, the bathware business reported revenue of 737 crores and EBITDA of 86 crores and PBT of 31 crores. While in Quarter 2 of the financial year 26, it recorded revenue of 397 crores, EBITDA of 43 crores, and PBT of 16 crores. Even though the market remained somewhat soft this quarter as well, we continue to be well positioned, backed by our strong fundamentals. Hindware's leadership in the market, along with high brand awareness and deep consumer trust, continues to drive our growth ambitions. As mentioned in our previous call, we've undertaken a series of focused strategic initiatives in the bathware segment, refining our go-to-market strategy, driving premiumization across sanitaryware and faucets, and implementing a zero-based budgeting approach to further strengthen margins. We also launched our new brand campaign, Designed for Sukoon, which has received an excellent response from both consumers and the trade. Together, these initiatives are expected to drive stronger performance and momentum in the second half of the year. We continue to deepen engagement with the influencer community through on-ground programs for our plumber network and building stronger collaborations with architects and interior designers. All these actions are helping us to widen our market reach and strengthen brand advocacy. And we'll continue to invest in building our brand and engaging meaningfully with consumers and influencers alike. In line with our premiumization focus, we have introduced a new range of premium faucets with higher average selling prices and stronger margins. This will further enhance our premium positioning and support long-term profitability. Coming to the Hindware Home Innovation Limited, the consumer appliances business, H1 revenue stood at 155 crores with EBITDA of 17 crores and PBT of 8 crores before exceptional items, while Q2 revenue was 84 crores with EBITDA of 7 crores and PBT of 3 crores before exceptional items. Our ongoing portfolio rationalization focused on high demand categories like kitchen appliances and water heaters is expected to drive both growth and profitability in the coming quarters. With that, I'll now hand over to Mr. Rajesh Pachnu to take you through the pipes and fittings business. Over to you, Rajesh.
Thank you, Nirupam. Good evening, everyone, and welcome to our investors call. It is a pleasure to be speaking with you today. For the first half of FY26, the company reported revenue of 315 crores, EBITDA of 20 crores, and a negative PBT of 15 crores. For Q2 FY26, the company reported revenue of 196 crores, EBITDA of 12 crores, and negative PBT of 5 crores. While the overall market environment remains challenging, mainly due to the recent fluctuations and subdued demand, we are taking focused measures to navigate these headwinds effectively. Looking ahead, our focus remains on strengthening performance in the second half of FY26 through strategic actions, portfolio optimization, and operational improvements. On the manufacturing front, trial production has commenced at our Roorkee facility in Uttarakhand, with commercial operations expected to begin in H2 FY26. This expansion will enhance capacity and enable us to serve customers across northern India more effectively. We are also continuing to expand our product portfolio to meet evolving market needs. Over the past few quarters, we have introduced solutions such as foam core pipes for underground drainage, double wall corrugated pipes, further broadening our product range to address diverse application needs. At the same time, we are enhancing efficiency across the business, leveraging technology, optimizing resource allocation, and strengthening cost management. Alongside this, we are continuing to expand our brand and distribution footprints to deepen market presence and customer engagement. Overall, with capacity expansion, a diversified portfolio, and ongoing strategic initiatives, we are well positioned to deliver stronger growth and improved profitability in the second half of FY26. With that, we are happy to take your questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Resha Mehta from Greenedge Wealth Services. Please go ahead.
Yeah, thank you. One, just wanted to
Resha, you are not audible.
Is this better? Hello?
Resha, please unmute your line and speak.
Hello, am I audible?
We can move to next.
As there is no response from Ms. Resha, the next participant is Aditya from Sarthak Securities. Please go ahead.
Yeah. Hello. Am I audible? Hello. Hello. Am I audible?
Yes, please.
Yeah. So I have few questions. Thank you for the opportunity. So the first one is the company has demonstrated strong revenue recovery as well, and we are noticing a concerning trend in subsequent EBITDA margin compression across some segments. So despite volume growth in bathware, so I'd like to know, what's the management strategies and underlying drivers of it, and what are you looking for? How are you trying to sustain margins going forward?
Please answer.
Yeah. So as you would have seen, we've delivered a growth in this quarter for 10.1% in bathware. So the objective that we had of getting back to double-digit growth has been delivered in this quarter. While there's been a marginal decline versus the previous quarter, at an overall level, we are at an 11.6% EBITDA in the business. Going forward, we've taken a price increase across both sanitaryware and faucets effective 1st November. So we expect that to have a positive impact on gross margin. As shared earlier as well, we are also focused on products in the mid-premium and premium segment in terms of new product introductions, which are all going to be at higher gross margins than the existing products that we have. So through the premiumization strategy that we have, we expect a positive impact, and the price increase, of course, will have a positive impact. And we are continuing to drive productivity and efficiency in the plants as well, to ensure that from a cost perspective as well, we are well in control. So we do expect in the H2 of this year, 1 to 2% increase in the EBITDA percentage based on all the actions that we've already taken.
Okay, sir. Noted. And the next question is, as mentioned, sir, earlier, Hindware is the leading player in the sanitaryware and faucets. So, what is your current market share in sanitaryware and faucet segment? And you recently launched Hornology automated toilet systems and all. So, what is the ASP realization trends as well?
So, unfortunately, there's no syndicated data required available for the bathware segment. So, unfortunately, accurate data on market share is not available. Having said that, very clearly in the sanitaryware space, we are a top 3 player. And in the faucet space, again, we are a top 3 player. So, I think that's the closest I can get to giving any data, because unfortunately data is not available. However, like I said, we've focused extensively on the premium segment over this last few quarters. And we are gaining, I think overall, we are gaining share because the market has been relatively soft. As you've seen, we've grown at 10%. But in the premium segment, with the new product introduction that we've done across sanitaryware and faucets, we've also seen a very good growth at the premium end. So we've definitely gained market share in the premium segment as well.
Okay, sir. Got it. And so lastly, what percentage of bathware revenue comes from institutional B2B versus retail channels? What is the margin differential?
So the institutional business is roughly about 23% of our sale. It remains between 20 and 25% pretty much in the quarters. There is, obviously, by the nature of the business, there is a lower gross margin in the institutional business because we're targeting, obviously, large architects, large builders, large projects, etc. So there is a differential. The differential about 400 basis points, so roughly about 400 basis points between general trade and the B2B business.
Okay. Okay. Sir, one last question. I recently, seeing the balance sheet, bathware business balance sheet excludes an intercompany loan of 98 crore extended by HHIL to Hindware Limited. So, what is the rationale of this loan, and what are the terms of interest, repayment, and so on? Is this loan expected to be cancelled or transferred post demerger? How does it impact the net debt calculations?
So, if you recall, there was a rights issue in the month of December 2024 in the company, and one of the end use which we had stated that the parent company will give a loan of 98 crores to Hindware. This is the same loan. This is an interest-bearing loan, and post demerger, this loan will remain as it is, as a loan from the post implementation HHL Limited to Hindware Limited, and on the due dates it will get paid.
Okay, sir. Thank you so much, sir.
Thank you. The next question comes from the line of Resha Mehta from Greenedge Wealth Services. Please go ahead.
Yeah, hi. I hope I'm audible now.
Yes, please, you're audible.
Yeah, thank you. So I'm fairly new to the company. So just looking at the consumer products division, so if you could just call out, apart from chimneys and hobs, are there any other major appliances as a part of this segment? And also, what would be our market shares, in each of the products in this particular category? And also, if I see, since FY23, in the last 3 years, our revenues of this particular segment has come down from 500 crores to close to 356 crores. So what are the reasons behind this, and, how are we trying to fix this?
So we've taken a conscious call when we did our planning for this year. We've taken a conscious call to focus on a few categories. The first is kitchen appliances. The other is water heaters through our joint venture with Group Atlantic called Hintastica Private Limited, and coolers only through the e-commerce channel. We took a conscious call to discontinue certain categories that we'd been in the past few years. So coolers through the general trade or distribution channel, fans, air purifiers, water purifiers, kitchen fixtures and fittings. So all of those categories, there was a board resolution and we basically discontinued those businesses. The idea was to focus very clearly on a few categories and win in them. So let me take kitchen appliances first. So chimneys is by far the largest within the subcategory within the kitchen appliances category. There we are a significant player. We are a top 3 player in chimneys with very, very good brand recall, very good customer satisfaction scores, very innovative products, whether it's on low sound or using artificial intelligence. So we've got a great portfolio and doing extremely well in chimneys. We are now focusing a lot on cooktops and hobs because we see that as another big opportunity. Then we have kitchen sinks, which again is a big opportunity both in B2B and B2C. And then we have inbuilt microwaves and inbuilt ovens. So there are several categories within kitchen appliances that we plan to focus on and really grow them out. The second is water heaters, where we have an excellent portfolio of products. Group Atlantic is one of the largest in the water heater space globally. We've been partnering with them. So great innovative products across the price ladder. So we've got them at different price points, great aesthetics, great design, great technology. So we believe that there's a huge opportunity there for us there as well. And the third is coolers through e-commerce, where it is still a profitable business. Coolers through general trade was not a profitable business. So we decided to continue with that. So these are the 3 things that we will remain focused on. And we believe that by focusing on these categories, we can grow this business to a 470 to 500 crore company in the next 2 years. The reason that it's come down over the last few years is because we got out of a few categories. So some of the categories which are loss-making, we took a conscious call to get out of. So now in the categories that we're focused on, kitchen appliances, water heaters and coolers through e-commerce, that is where we will now grow.
So would it be fair to assume that, the journey from 500 to say 350 crores, right? So at least, these 3 categories where we are currently focusing on, those would not have degrown, like kitchen appliances, water heaters and coolers?
Correct.
So basically the degrowth is only coming from the discontinued segments. Would that understanding be right?
Correct. The primary degrowth is from the discontinued categories.
And in sinks, what kind of sinks are we getting into? Like, so is it steel sinks, quartz sinks, or what kind of sinks?
So they are both handmade as well as machine-made and designer sinks. So basically, any sink that goes into either a kitchen, that is basically what we are focused on. Because in our bathware business, we have sinks which go into homes. So in the consumer appliances space, it is largely kitchen sinks.
No. So my question was whether, in terms of the material that is used, is it a steel sink or is it a quartz sink, or what material is that?
So generally stainless. Yeah, largely stainless steel. So there's some which are made with slightly different material, but most of the category is stainless steel.
And out of the 350 crore revenue last year that we did, bulk of this would be chimneys and hobs. Would that understanding be right?
So in the last year, we also had coolers through the general trade. So that was a fairly large chunk. So this year, despite that base, so because of the fact that we are growing in kitchen appliances, we are making up for the fact that that base that we had of coolers in general trade, we know because we've discontinued the business to general trade, that base is lying there in the last financial year, and we're not selling through that channel in this year. So all the figures that you see for this year are basically for the categories that I talked about.
And what would be the path to profitability?
Yes, so I think it's fairly clear. Chimneys, for example, is a high gross margin business. So that is the primary driver in kitchen appliances. That is the largest segment in the market where we are doing extremely well. So that is one thing which is going to ensure that our gross margin remains healthy. Water heaters, again, basically we've taken a conscious call in terms of our sourcing to make sure that we have products which give us a good gross margin. And because we've got out of loss-making businesses, that itself has a major positive impact. So we remain in all the profitable businesses and we've got out of all the unprofitable businesses. So I think that was a good strategic call and that should really help us to move forward. And as we build scale, then clearly there's operating leverage that we get as well.
So the segment margins for consumer products last year was, negative 10%. So what is it for H1 FY26? And where do we see that, moving ahead?
So in H126, we delivered an EBITDA margin of 11% in HHIL. So we delivered an EBITDA of 17 crores, that was 11%. And in terms
for the consumer products division, right?
Yeah, so Hindware Home Innovation is right now on the consumer product division. So it has no other business. It's only the consumer product division.
Yeah, so I'm talking about the consumer products business only.
Mr. Nirupam is talking of Hindware Home Innovation Limited as a standalone company. The reported EBITDA for the first 6 months is 17 crores, which we see last year was on the negative.
Right. And then this basically gets demerged, right? The consumer products division only with these three categories, kitchen appliances, water heaters and coolers, that gets demerged, right?
Yes, correct.
And then how does the leadership, change in terms of people, etc., if you could comment on that? And, do we lose out on any synergies in terms of sourcing or, with, let's say, a few of our other segments?
So the teams are already distinct within the two divisions as such, but the overall arcing strategy remains the same because ultimately we are touching the same market. There may be some sort of an advisory coming from Hindware in terms of the key management heads which are there, because of the synergies between both we share the warehousing space, we share the after-sales service. That is already being built. When you see the standalone results for the first half, that element already exists. So it should not have an impact on the standalone operations when you see Hindware per se, or the standalone operations when you see Hindware Home Innovation Limited per se.
Sure, I will join back with you. Thank you.
Thanks all.
Thank you. The next question comes from the line of Harshit Mundra from BOB Capital Markets. Please go ahead.
Am I audible?
Yes, Harshit.
Thank you for the opportunity, sir. So the pipe segment volume declined by 21% in June quarter, and in this quarter volume has been good. Then why are the margins not well? Hello.
Rajesh?
Yeah, am I audible?
Yes, please.
Yeah. See, the volumes, actually, if you see, we had a very bad first quarter, which was not good for the whole industry, and we didn't also perform. We have come back in the next quarter, that is quarter 2, and we have a volume growth there. But the margins, there is a lot of impact of selling prices in the market because of the lower prices prevailing in the market, because of low raw material prices. we have to fight it out in the market. So there have been stress on the price that which we have been selling. So that is why you are seeing an impact that it is almost around, it is marginally increased but not increased because of the tough competition in the market.
So, sir, are we providing any incentive schemes?
Yeah, in the market, when the demand is not there, you have to sell, so you have to shell out a bit from your margins and then see to it that you make volumes. Otherwise, we would not have made volumes.
Okay. So, sir, what is the volume growth and margin guidance for H2?
H2, it would be at the same prices which are prevailing now, it will be approximately 15%.
Okay, so this is volume, right? And
yeah.
And sir, margin guidance?
Margin guidance would be around 9%.
And sir, what would be the steady state EBITDA and revenue guidance for the pipe segment?
Revenue is, as I said, since we are operating at a price which is below 6% than the last year's price, so it looks like the revenues would be flattish.
Okay, all right.
Unless and until there is an increase in raw material price.
Got it. So my next question is on the sale of asset related to the water heater JV business. So the provision of 116 crores would come to Hindware or the demerged entity?
No, basically, if you see, the sale of asset is not being done in Hindware Home Innovation Limited. It is sale of an asset in the joint venture company. And the end use of this 116 crores will go towards repayment of debt in the joint venture company. And the related corporate guarantee which Hindware Home has given, that will get extinguished. So this will take off the debt part at the group level, which is there in the form of guarantee. But ultimately, the cash which we generate out of the sale of the assets will be in Hintastica Private Limited, and the loans which has been taken in Hintastica, that will be paid off.
Okay. So our debt has increased from 695 to 746 in the last 6 months. So is the debt likely to come down, or how are you looking at the debt for March 26?
So when we internally do analysis, why it has increased is primarily on account of increase in number of days of the working capital in the first 6 months, which we feel that we should be able to take off to a level of around 5 to 7%. Right now, we are on average 90 in different businesses around almost 95 days net, and we feel we should be able to bring it down by 5 to 6 days by the end of the year. So part of the debt will get paid off there. Part of the debt we contracted because our new plant in Roorkee is getting commissioned now by end of December. And ultimately, the old loans we are paying off. We have already paid off 60 crores in the first half, and balance also will pay another 60 crores. So whatever cash we are generating in the system ultimately goes towards the majority, it goes into the repayment of debt.
Okay. So last few questions. So could you please share revenue growth and margin guidance for Bathware for the second half?
Yeah. So in the second half, we're expecting early to mid-teen growth in sales and an EBITDA of about 13 to 14%.
Okay. And sir, what would be the steady state EBITDA margin for the Bathware segment for like FY27, FY28?
So we expect in the next year, so FY27, to add 1 to 2% on the EBITDA percentage that we deliver in FY26.
All right. So thank you so much, sir. I'll join back with you.
Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. The next question comes from the line of Viraj from VS Investments. Please go ahead.
Hello, sir. I'm audible?
Yes, please.
Yes. So can you provide 3 to 5 year revenue growth guidance for institutional business? And are there specific large projects in the pipeline that will drive FY26 and FY27 growth?
Yeah. So the institutional business has been growing well last year as well as this year. When I look at the hardware part of the business, that's primarily where we play. The growth will be between 15 and 20% for institutional sales this year, and we expect that momentum to continue for the next couple of years. So 15 to 20% is the kind of growth that we're targeting in institutional sales. And that's driven by the fact that we have a very healthy order book. As you know, in the B2B business, the order book is critical. So it's not just sales that you get, but it's the order book that you create for the future. We have an extremely healthy order book, which is a mix of basically large builders, mid-level builders, through architects, etc. So that is what gives us the confidence that we can continue the momentum of the last year and a half, 2 years into the next couple of years as well.
Okay. My second question is, the Roorkee plant is under trial production to capture Northern India market. So when is this plant expected to achieve commercial production? And what is the expected ramp-up trajectory for 26 and 27?
Hello.
Hello.
Can you come back again, please?
Yeah. So the Roorkee plant is under trial production to capture the Northern Indian market. When is this plant expected to achieve the commercial production? And what is the expected ramp-up trajectory for FY26-27?
See, since we have already discussed that we will be commercializing it by the end of this quarter, and then we get one full quarter for the current financial year. And for the next year, since you know this plant will only make pipes, which is a freight-sensitive market, so it will take us some time to ramp it up. I think by the end of the next financial year, we will be achieving its peak sales. That's around 20 crores per month.
Okay. Also, the management launched a foam core pipes, PPR plumbing pipes, and fire sprinkler systems. What are the incremental revenue contributions expected from each category in 26-27?
Yes.
What are the gross margins on, and also what are the gross margins on these new products versus the traditional CPVC pipes? And are these products, helping you move up the value chain and reduce the pricing pressure?
Yeah. See, as far as foam core is concerned, we have already launched it in the market. DWC will be launching this month, or maybe within 1 month. And then the fire sprinkler system is a very big project. It will come up in the month of March. So they are all value-added products, basically. And once we ramp them up, we are seeing a gross margin of around 30 to 32% in these items. But once the revenue comes, then only it will add value to the bottom line.
Okay. Also, the presentation emphasizes premiumization and design-led products. So what percentage of bathware revenue comes from premium versus the mid-range versus the budget products? And how has ASP trended over the past 2 to 3 years?
So our focus on mid-premium and premium, like I said, has accelerated over the last few quarters. So between mid-premium and premium, we have roughly about 50% of our sales. Going forward, we expect that ratio to increase because of focus in terms of new product introductions from a point of view of capturing the way the market is moving and from the point of view of improving gross margins. We'll continue the focus on premium products. So we expect that ratio to go up in the coming years. If I look at the ASP trend, there's been a marginal increase over the last couple of years, nothing very significant. We do expect that in the coming years with the focus on premium products to go up in the next 2 years.
So will the premium products, drive the volume growth or just the margin expansion as well?
So they'll drive both value and margin.
Okay. Thank you.
Thank you. The next question comes from the line of Praneeth, an investor. Please go ahead.
Hello. Thank you for the opportunity. So in terms of trying to understand the management focus on the pipe segment, because I understand it's a very competitive market and we are not able to get the pricing power, we're not able to have pricing power in the market. So why does the management want to invest so much and want to compete in this market and scale this business instead of all the other possibilities the company has with it?
See, it's like what you are saying is it has become a competitive market last 1.5 years only because of the lower price of the raw materials, which has come down rock bottom, which has never happened in the past. This market has been, pipes market has been growing with a healthy CAGR rate throughout in the last 20 years. So now we are not investing, but this Roorkee plant which we are investing, we have taken a call 2 years back. Because when we started 7.5 years back, we were the fastest growing company in terms of percentage in this category here. So we thought of going to the north because eventually in this business, if you want to grow in this business, it consists of two components. One is a pipe and one is a fitting. Pipe is a very freight sensitive product, so you have to have your manufacturing facility across the country. So that is why we decided to go to the north first, because since we are based in south, we are not able to send our pipes from south to north, the PVC pipes, because it is very high freight. And that is why we invested here. Now we are not investing anywhere, and we are just waiting. We are doing well in the market. We are just waiting for the time, because there has to be a price correction ultimately at the end. And then this market will go, because the selling prices are directly proportional to your raw material price.
Understood. So when do you expect to start realizing a profitable business in this particular? Let's say if the price stays at this level for continuing next few years, does the company expect? When does it expect to turn profitable?
So in that case, so what we need to do is we'll have to cut down our costs. We'll have to take some strategic steps, and also try to with this Roorkee plant coming up, we will have a better sales, because we are not able to sell our pipes in the northern market, which we are doing in southern market. So with this capacity, once we consume this capacity, the revenues will go up. Once the revenue goes up, your all costs come down automatically.
So net of
we
the Roorkee plant
to happen in next 2 quarters.
Got it. So when will the company make a decision in terms of understand, let's say, because there's new capacities that are coming in terms
I'm sorry to interrupt you, Mr. Praneeth, but there seems to be a lot of background noise from your end. Can you please move to a quieter area?
Is it better now?
Yes.
Yeah, sorry. So I was trying to understand, when will the management make a decision on whether to cut down costs? Because there's new capacities that have been coming up in the PVC resin segment also in the country. And there has been commentary that the prices might stabilize at this level. So when can the management take a call in terms of reducing the costs?
No, yes, we have already started this process, and it is, as I said, it will take some time. You can't do it overnight. So we have taken this call and we have started to do this, and at the same time what I am saying is we are expanding in the north. With this we will expand our base. We'll go to the corners where we are not there at the moment. That is one part. The second thing is that this is not true that these prices are going to stay there for long, because we already have an anti-dumping duty which will come, maybe it is expected any time now, which comes into place, and then the prices will go up. So we are optimistic about it.
Got it. So, understood. So in terms of capacity utilization, at this point of time, net of without Roorkee, what type of utilization are we having right now?
We are at the moment 65% of capacity utilization.
Got it. Understood. And regarding the rest of the business, I understand that we have been cutting the long tail at this point of time and trying to improve the margins. So I was trying to understand, let's say your competitors are at 15% EBITDA margin. So what could be the path for this for our company in terms of reaching that kind of margins, and what could be the tentative horizon of reaching that? Because I understand the company is making all the efforts, but when does it think it can realize to increase it from now on?
This question is to?
This question is to consolidated level, like the overall business of Hindware Innovation Limited.
So if you see, a number of steps have been taken, if you track us for the last 3-4 quarters, which involve, consolidation of our businesses into profitable segment. Second is consolidation and optimization of the cost. There is a growth which is coming back. We will use the operating leverage. So I think it should take 3, 4 to 5 quarters, wherein we start punching in the right numbers. And we also feel that the market will support us. Like as Rajesh was saying, we are driving volume growth, but that is not visible on the revenue growth because of the continued changes in the input raw material resin prices. We are looking at cost optimization again at every stage. So the directionality of the entire organization today is purely focused on improving the return ratios. Given the fact that now 4 core businesses have been set for us: sanitaryware, faucets, pipes, and kitchen chimneys and hobs. So these are the 4 segments where we are driving growth. And once a little bit of support comes from the market, and also we are also trying to push a lot of it internally, the operating leverage will come into place. I think by end of FY27, you can see the margins what we are talking of.
Understood. And one more the thing regarding the premiumization of products. The company has mentioned that it will start introducing products in the most mid to higher premium and categories. So I was trying to understand going forward, what type of growth could we expect because of the higher unit prices of our, let's say, products? Because I understand that it can be a substantial role as the premium products are going to be substantially priced higher. So what kind of price plus, let's say, higher priced products is going to drive the growth in the revenue?
So through a combination of all the steps that we're taking, focus on weighted dealers, premiumization, improving the product portfolio, driving productivity and efficiency in the plants, etc. Through a combination of all those steps and a strong focus on our go-to-market and investing in the brand. Through a combination of all that, we are clearly targeting that we grow 1.25 to 1.5 times at least of the market growth rate. So whatever is the market growth rate in bathware, we will grow 1.25 to 1.5x of that. In consumer appliances, the growth rates are different in different categories, but we continue to drive strong double.
I understand that, but I'm just trying to understand in terms of, let's say, the premium product growth category, because that can have a substantial impact in terms of gross margin, right? So I was trying to understand in terms of price increases on which categories and what kind of growth could that contribute to the overall revenue growth. Let's say the revenue were to grow at 15%. What percentage of that 15% would be the price increases the company is taking due to introduction of premium products?
Yeah, so the ASP part of it would contribute roughly about 3 to 4% of that growth rate.
Got it. Understood. And one last question regarding our market share. You mentioned that we have been growing in our market share despite the slow, because we are able to push more volumes despite the slow market. But what were the factors that enable the company to grow market share in this market? Would it be, let's say, doing a more price, giving more margins to the distributors, or what is the strategy the company employed to grow this market share?
Yeah, so I think there are multiple steps that have led to this. So one is the strong focus on winning share in weighted dealers. So making sure that in the large dealers across the country, we're actually gaining counter share. So I think there's been a very concerted effort there, and that is really paying off. So that's one. The second is in terms of strengthening the product portfolio. I talked a lot about the premium end, but basically we've launched products at mid-premium and premium, and that's really helped in terms of new products contributing to volumes and value. And we've invested a lot in the brand. So, and on the brand, it is not only your traditional media. We've done a lot of digital marketing, particularly this year, and we are finding that really pays off in terms of consumer engagement. We plan to continue that very aggressively. So I think a combination of all of these things is leading to growth, which is higher than the market, and therefore basically in market share. In consumer appliances.
Yeah, sorry. Continue. Sorry.
In consumer appliances, like I said, because we have a very, very strong portfolio in chimneys, and we've strengthened that portfolio this year and have a slew of new products lined up for the next 3 quarters already. We are very confident that we can continue the growth momentum that we already have. And we see a big opportunity. So our market share in cooktops and hobs is relatively lower than it is in chimneys. So we see a huge headway in terms of gaining share in those categories. So there are several categories that we play in already where we see an opportunity for high growth. And of course, we continue momentum in our largest category of chimneys.
Thank you. The next question comes from the line of Vatsal Parag. Please go ahead.
Yeah, thank you for taking my question. Firstly, on the bathware segment, so sequentially, there has been around a 200 basis point decline in EBITDA margin. So what exactly was the reason for that? So is it higher institutional sales, or is it a seasonal effect, or something else? So what was exactly the reason?
Yeah, so there's a seasonal effect. Diwali was earlier this year, so marketing spends in September, we basically started the new campaign that I talked about, Designed for Sukoon. We started in September itself because Diwali was in the 3rd week of October. So there's just a timing issue there. Our investment behind the brand was higher than in the previous quarters, for example. That's the only factor, nothing else. So nothing else changed majorly in terms of gross margins, etc. It was investment in the brand and the brand campaign.
Got it. That's helpful. And secondly, on the industry part, so like what kind of industry growth are you seeing? Even directionally will help. So like you are saying that you will grow around mid-teen level in the second half of the year. So what kind of industry growth rate are you looking at?
So in bathware, expecting growth in the second half of this year and probably going into next year to be in the single digits, probably about mid-single digits. In consumer appliances, the growth rate will be slightly higher. It will be in the late single digits or even early double digits. So we're seeing slightly different growth rates in these two segments, but in bathware, we expect it to remain a little muted. Slightly better in second half versus the first half, but then the first half was pretty soft, so still in the mid single digits.
Okay. And in the consumer business, so what kind of exit revenue run rate are we looking at for this year?
I'm sorry to interrupt you, Mr. Vatsal, but please join back the queue for further questions.
Okay, sure.
Thank you. The next question comes from the line of Aditya from Sarthak Securities. Please go ahead.
Yes, sir. I wanted to know what percentage of COGS is raw materials, as in resin for pipes, PA and all, and how much dependency do we... Hello?
Yeah, go ahead.
Yeah, and how much revenue is at risk if raw material costs spike? So, like, do we have long-term contracts with suppliers, or is there any pricing flexibility in the market?
See, in this business, there are two types of raw materials. One is the PVC and one is the CPVC. In CPVC, you have a contractual business with the supplier, but in PVC, it's not a contractual business because most of it is indigenous. 68% of the total quantum contributes to the raw material business, raw material part of it. And since you have daily price fluctuations, so it is not a contractual business with them.
Okay. Yeah. And so, one last question. What is the annual capex on this? Like, what are the ROI expectations on the new capex? And further, is capex expected to decline as the company reaches maturity capacity to free up cash for dividends, and so can we expect that as well?
See, it's like basically once you have done the capex, now after you start your commercial operations, in this, what happens is with the new capex and the new plant, you can't calculate all this only on the basis of that plant, because this is a wholesome product. The fittings will be transported from the mother plant to that plant. The sale will happen once it is a combination of pipes and fittings. So you have to see it holistically on a total wholesome basis. In the PVC industry, you cannot talk about a single plant and its capacity utilization and its ROI. Definitely, it will once it ramps up, it will give us sales. Once it adds up to the base sales, then only you can find the ROI in this.
Sure, sir. Okay. Thank you, sir.
Thank you. The next question comes from the line of Prakshit Gupta from Fair Value Capital. Please go ahead.
Thank you very much for the opportunity. And I'm sorry I missed some parts of the investor call, so my questions might be redundant. I wanted to know the split between the faucetware and sanitaryware for the quarter, and if you could help me with the respective growth rates as well.
Yeah. So the split is about 55 to 45 sanitaryware to faucets. So sanitaryware is 55% of sale and faucets is 45%. And the growth rate for both is quite similar. Yeah, so overall growth rate is 10.1. There isn't too much of a differential between sanitaryware and faucets. Faucets growing marginally faster.
Understood. Now, another question about the raw material, please. I believe that the PVC ADD was expected to be at least decided by this week. Has any decision been taken already?
Yes, it's happening right now. The calls are going on there. We'll come to know something around maybe in the next 1 hour.
Oh, okay.
It was to happen today. It's happening with the ministry. I think at 6 o'clock we'll receive this information about ADT.
Understood. Now, on brass, so in faucetware, I believe a large share of our raw material is brass, and brass prices have also gone up in the past couple of months. How do you see them in the next few quarters, if you can make that kind of an outlook? Because that will directly affect the gross margins and eventually lead to the profitability and an operational level.
So we've already taken a price increase in faucets of about 3.5% starting 1st November. So this was based partly on the fact that brass as a key input prices were going up. We've also taken it in sanitaryware. So across the portfolio, we've taken 3 to 3.5%. We'll keep tracking the brass price very carefully. And if we feel the need in the next couple of months, we may take another price increase, but dependent on how it moves. The expectation is that it's likely to move higher in the coming months. If it does, we'll take another price increase.
Understood. So just final question on the bathware segment only. I heard your guidance of a mid-single-digit growth for the financial year 26, but directionally, how do you see the demand scenario in the retail segment?
Yeah, sorry, just to clarify that mid-single digits was what we said for the market growth rate.
Our growth rate, mid-teens.
Yeah. So our growth rate in this quarter itself was 10.1, and we expect that to accelerate in H2 of this year.
And on an industry-wide level, you see now directionally the worst to be over, and we are moving in a positive demand scenario sort of a situation for the next couple of quarters at least?
So what I'd shared earlier was basically we're expecting the second half of the year to be better than the first half from a market movement perspective, but it'll still remain in single digits. Going forward next year, that mid-single digits may change to high single digits, but it's unlikely to become double-digit market growth.
Understood, sir. These were very helpful. Thank you very much, and good luck for the current quarter.
Thank you. Thank you.
Thank you. The next question comes from the line of Vatsal from Ninestone Capital Management. Please go ahead.
Yeah, thank you again. I was asking about the consumer business part. So what kind of exit revenue run rate we are looking at for the current year?
So we expect to end, so quarter 4 of this year, we expect to end at a run rate of 100 crores, and then going forward next year, accelerate further.
Got it. And just on the margin front, so having removed the loss-making parts, so what kind of steady-state margins are we looking at in the consumer part?
So we're looking at moving to an EBITDA of 10 to 12% in the next financial year.
Okay, got it. And just the last question, what was the book value of the assets being sold in the JV?
It's more nearing to the transaction value only. I can't share the value right now, but it's more near.
Okay. Yeah, that's fine. Okay. Thank you.
Thank you.
Thank you. Ladies and gentlemen, as there are no further questions, I would now like to hand the conference over to the management for closing comments.
On behalf of Hindware Home, I'd like to thank everybody who joined the call. I hope we answered all your questions. We have taken a number of steps over the last 4 or 5 quarters in terms of improving the returns, bringing back the growth. I think next few quarters are also important for us in order to demonstrate that how we have come back. So we'll be in touch with you. Thanks again for joining the call.
On behalf of Hindware Home Innovation Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.